Welcome, everyone. Welcome. Today we're doing a deep dive into something, well, genuinely fascinating in DeFi, a strategy that really flips the script on how we usually think about things. Especially, when it comes to meme coins. Forget the quick hype cycles for a second. Let's unpack this idea of thickness in a liquidity position and why someone thinks it's absolutely key for, get this, long-term meme coin dominance. Sounds wild, right?
It does. And yeah, the source for this discussion today is quite specific. It's an article called How to Build Thick Liquidity for PUSSY on Alcor. It's written by Bruce Stewart. He's involved with Metallicus. The Proton Pussycat community, calls himself a crypto enthusiast and also a meme coin and NFT creator.
Yeah.
The piece is dated July 17, 2025.
Okay.
So yeah, our focus is squarely on the strategy he lays out there for the Pussycat token.
Right, the Pussycat token. So the big question we need to tackle for you listening is this. How could adding liquidity, specifically as the price goes up, possibly make a meme coin, well, serious? How does that lead to stability and growth? It just seems so counterintuitive, We always think sell high, right?
Exactly. It goes against that ingrained dump as it pumps instinct.
So what's the logic? What makes this potentially powerful?
Well, fundamentally, the source defines this thick liquidity as like a really substantial, concentrated amount of tokens. The main goal is to make trading super smooth, minimal slippage.
Okay.
And the core idea really hinges on generating more swap fees, because more fees mean, more revenue for the people providing the liquidity, the LPs, and for the tokens ecosystem overall. It's framed as a structural thing, not just a quick move.
Structural. So it's not just about checking money into the pool. It's about where that money, that liquidity is sitting and how it moves. Can you maybe unpack that active range idea a bit more? How does keeping the liquidity thick right there maximize those fees, especially on something like Alcor?
Precisely. Yeah, on platforms like Alcor, which often use what's called a concentrated liquidity model, think Uniswap v3, that kind of thing.
Yeah.
You're not just spreading your capital thinly across every possible price from 0 to infinity.
Right.
Instead, you choose a specific price range to put your liquidity in. And the active range is just, wherever the price is trading right now.
Okay, makes sense.
So the strategy here, the core of it, is to keep adding liquidity near that current price, specifically as the price climbs. This means your capital stays working, stays in the game, right where the trades are happening.
I see.
And because it's concentrated there where the action is, you capture a much bigger slice of the swap fees for every single trade within your range. It also, as a side effect, dramatically cuts down slippage for traders, which makes trading cheaper and, frankly, more attractive.
Okay, wow. That really does challenge the standard crypto playbook of just taking profits off the table immediately. What's the fundamental mindset shift being asked of a token holder here? It sounds less like quick trading and more like, actively building the market.
That's a great way to put it. Yeah, it's a shift from just being a speculator watching the charts to being an active contributor, someone building the market depth.
Right.
So instead of that typical reflex price goes up, you're actually encouraged to do the opposite. You add more liquidity near that current trading price.
Yeah.
This action, according to the author, builds up a thicker wall of assets in the pools, whether that's, say, Pussy paired with XPR, the Proton token.
Pussy XPR, yeah.
Right? Or maybe Puss alone, pairing it with some loan asset.
Yeah.
The thinking is simple. High volume means more fees.
Yeah.
And by constantly adding liquidity where the price currently is, you keep earning a bigger share of those fees over time. It's really moving past just holding or hodling to actively fortifying the token's foundations, making it stronger.
Fortifying. I like that. So it's not just about my own potential fee earnings. It's framed as something that actually helps the whole Pussy token ecosystem. How does building this thickness, as he calls it, really benefit the token overall beyond just generating fees for individuals?
Yeah, it's positioned as vital for the whole system's health. For Pussy token holders, this strategy is presented as the way to, and I quote again, make the meme serious. By creating this consistent, deep liquidity, it directly helps grow the LP rewards for everyone involved, which naturally pulls more people in to provide liquidity.
Okay, it creates a positive loop.
Exactly. And that increased depth, that thickness, it really helps stabilize the price chart. It can absorb bigger buys and sells without the price swinging wildly.
Less volatility.
Much less. And furthermore, a stable liquid market with low slippage. That's what attracts bigger traders, bigger investors, the so-called whales. They usually avoid thinly traded, volatile stuff. So this could change the game, turning it from just a speculative meme into something with actual market stability, encouraging long-term holding over quick flips.
Okay, so the source has this very clear instruction, right? Don't dump, just stack. How does that specific phrase really capture this whole philosophy of fortifying the token?
Yeah, that phrase, don't dump, just stab, it's basically the practical application of this whole long-term idea. It's the direct opposite of that short-term profit grab.
Right.
By picking a pool, let's use this example, Pussy metal, so Pussy paired with the Metallicus token, metal, and then consistently adding more liquidity near the current price, you're actively putting your assets to work in the market structure. It's not selling. It's deploying your tokens to earn fees and deepen the pool. The philosophy is, if everyone, or at least many holders, do this, they collectively build this really robust, self-sustaining market. It becomes a community effort to create a foundation that can handle bumps, support growth, and just make the token more resilient and appealing overall.
Okay, let's just pull this together then. The central idea, thick liquidity, it's really presented as this active structural way to build value, a real contrast to just relying on hype or, passively holding on. And according to the source, the whole point is to generate more consistent fees from swaps, make trading much smoother with way less slippage, and just create a better experience for people holding the token. It's about, like you said, fortifying the market, not just playing the price swings.
Exactly. And linking that back to the Pussy token ecosystem specifically, this thick liquidity approach is explicitly laid out as the path to growing those LP rewards sustainably, to stabilizing the price chart by building real market depth, and importantly, encouraging those bigger trades and attracting the whales.
Right.
And the core action, the takeaway for a holder, is clear and consistent. Don't dump, just stack. Add liquidity near the current price. Use pools like Pussy Metal, put your tokens to work. So here's something to really chew on. If this kind of structured liquidity approach, building and maintaining this thickness, can actually change how even a meme coin functions. If it can stabilize its value, incentivize people to stick around long-term, improve how the market works, what does that really imply for the future of DeFi more broadly? Could this change how we think about value itself in digital assets? Moving beyond just pure speculation towards active structural contribution, building real foundations.
That is a really potent thought to end on, isn't it? The idea that even in what seems like the fun, maybe sometimes frivolous corner of crypto with meme coins, there are these deep strategic plays happening to build something potentially lasting, real value, real community.
Yeah.
It definitely makes you think about the innovation bubbling just beneath the surface in these digital ecosystems. Lots to consider there. So we encourage you to reflect on these potentially new ways of building and sustaining decentralized assets. Until our next deep dive, keep exploring.